The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Tuesday, the 5th of January 2021. On the podcast today, Glen Goodman, former ITV News business correspondent and now the author of The Crypto Trader, covers this week's moves in Bitcoin, and it's been big. Ethereum and other cryptos he's watching, and he talks about whether Bitcoin he thinks is rolling over. We also mentioned Argo blockchain mining, which I held a while back before the big move, and I lost patience. Plus, as always on the podcast, at the end of the podcast, I'll be highlighting the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most liked RNSs too. By the way, you can see both these lists at voxmarkets.co.uk. We'll see lots for the content. In fact, there's an article there on Mode Global Holdings. Sees record-breaking December as Bitcoin surges. There's a video there on macro investing in 2021. It's a masterclass. Paul Hill discusses the outlook of the economy with some big names, well-known fund managers. Check that out, voxmarkets.co.uk. And our COVID-19 index. Biggest rise today is Avacta, up 7.4% to 131. Biggest faller, Fusion Antibodies, down 11.3% to 110. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Glen Goodman. He's the author of The Crypto Trader. All right.
Yes, I am.
Are you? So listen, it's had a heck of a run, Bitcoin. Do you know what annoys me? Do you know what annoys me is that, in fact, I think probably before we started, or around about when we started, I think we were chatting to each other. It was a while back. I did about 3 or 4 videos on Bitcoin and Argo blockchain mining as well, saying this is, worth having a bit of Bitcoin, all this stuff. And I think that was when Bitcoin was at $8,000.
Yeah.
I did, and then I sold because I got bored, and Bitcoin's now running to $34,000.
That was it. You got what? I remember the precise moment. That's how the market works, isn't it? It's through attrition. So it gets boring for a while to kind of lull people into a false sense of not security, false sense of this isn't worth investing in. And then that's when it takes off. And it was sort of around about September, October time that you'd got really bored with it. Because it hadn't been doing anything for 6 months, sort of dawdling downwards in a very boring way.
So 4 times your money they've been there, but I didn't have it. And of course, I also before that, I sort of in the easy routine, because you can buy Argo blockchain mining via your ISA, AIM ISA. So that's why I bought that via that originally. And again, their share price since I sold has gone berserk. And one of the lessons I learned from that is just have some patience. It's sometimes if you're investing
have
strategy,
a little patience.
Yeah. Well, if the premise is that
take that once said.
Yeah. If the premise on which you're basing your investment strategy on hasn't changed, you stick with it, because you shouldn't get out of it just because of impatience. I've done that several times. I mean, I did okay last year. I did 84% on my entire portfolio. I've done 400%.
That's great.
400% in the last 3 years. 51,000% since 2009 in my portfolio. So I've done well, and I've earned more money investing than I have in all my jobs put together. And so I've done. But one of the things I often do is, because I suppose as humans we find it very hard to do nothing. And so sometimes doing nothing is all you have to do. And that's very hard sometimes, isn't it,
Yeah. Yes, it is. It's the hardest thing of all.
In fact, 50 pence. You got Argo blockchain. Sorry, look at the chart. Argo blockchain is 50 pence. I was talking about that around about sort of, I think, around about sort of between 4 and 8 pence.
Wow.
Yeah, so that's annoying.
Yeah, that's annoying. But like you say, you can't win them all. There's always ones that get away and others that you manage to grab, and you can't just cry over the ones that you missed, because there are always going to be loads of those. You're only human. You can't catch every trend going. I beat myself up over the ones I've missed too, and it's just silly, because we catch plenty and we shouldn't complain. But yeah, patience. very, very important virtue in trading, underrated. And actually, I don't know about you, Justin, but I found it probably more difficult to have patience since I've been trading. Since I gave up my job in broadcasting about 8 years ago. And actually, I gave it up on purpose because the idea was I was making more money trading than I was from my job, like you've just said about yourself. But I decided, because maybe I'm lazier than you, I didn't want to do both anymore.
Yeah, well, do you know what? You're spot on there. If I didn't have anything to do whatsoever, I'd probably trade a lot more, and I'd become less of an investor and more of a trader. And I probably wouldn't do any better.
That's kind of what's happened to me a little bit, I guess. Is that, because when you have a lot more time on your hands, you naturally want to tinker, and you have to fight the urge to tinker all the time. Whereas when I had a full-time job as well, it was a hell of a lot more stressful because I had to worry about trading and worry about my job, and it just became a bit too much. But at least I didn't have the opportunity to tinker anywhere near as much as I do now.
Yeah. I mean, it's one of those things, isn't it? Discipline and patience. It's like the same kind of thing. It's very easy to write good rules, for your investing and trading down in the cold light of day. But when it comes to it, when you're actually trading, then emotions start taking over, and you start to make excuses and dismiss those rules. So it's harder to actually stick by the rules than it is to write rules. Writing rules is quite easy because we all know what the mistakes are generally, but then sticking by them is a lot harder, And so, I'm glad. Listen, I could probably, I know I could do this full time. I wanted to. I don't need to, I think, but that's the thing. I do. I enjoy my job. I enjoy working and talking to in companies, about investing and all that stuff, and guys like you. And also, it gives me something else to do apart from look at the markets all the time.
Do you sometimes wake up, though? I mean, I know you wake up stupidly early. Maybe you're not one of those kind of people like I am, but don't you ever wake up and just go, oh, I wish I didn't have these commitments to do all this work today?
No, because it's not work for me. Like I say, I enjoy it. I mean,
even though it's like 4 a.m.
But do you know what? Because it gives me a routine as well. I find. Like this lockdown now, some people say one of the hardest things about lockdown is they lose the routine. I find that sometimes over Christmas, I just go into a silly sort of downward spiral. I stop exercising for quite a few days, and then I eat and I drink too much, and I almost yearn to get back to that routine where I get up early, do my exercise. It puts everything in perspective. I start eating properly, a lot better, and so I need that kind of structure to the day. So listen, the reason why I started the podcast is because I wanted to get a bit of an inside edge, get better at investing. So I want to talk to commentators and CEOs and all that stuff. So I still find a lot of the companies that I invest in have either been on the podcast or someone will hear the podcast and say, oh, there's another company like that, have a look at that, and they'll so it helps with investing as well, so
yeah, that's true. I guess it does. I mean, the problem I used to find, well, apart from the stress of as I say, doing my job and also worrying about trades and perhaps turning on a trading screen a little bit too often. Apart from all of that, I just hate getting up in the morning. Yeah. I hate it. And the first thing I did when I gave up my job was just commit to never getting up early. And I don't get up early. I haven't got up early for ages. And more to the point, when I do get up, not early, I then am able to just lie in bed, like looking at my screen for a while. Then I'll go and get my breakfast. I like to just wake up very, very slowly, and I think that's the thing I've enjoyed the most. Yeah. Whereas, when you're getting up for work, it's like every day was like a cold shower for me.
Mm-hmm. Well, no, I've always been an early person. I used to do breakfast radio, so I've always been early. So anyway, let's Bitcoin. Is it rolling over here? I did put out a chart saying I think now Bitcoin's going to have a breather, and it did start to have a breather because essentially just looking at the relative strength index where it was up at 90, and the last couple of times it's done that, generally gone, it's had a breather. And the fact that it's gone stratospheric, it's gone really up, the ramp has gone almost vertical. Sooner or later it needs a breather. Are you in? Are you out? What's happening there?
Yeah, so it had a breather, didn't it, yesterday? And I had stop losses set in the market, quite tight ones, because, as you say, it has been rising more and more steeply. I drew a parabolic curve on my chart, which you can have a look at in a tweet that I tweeted yesterday, where I show in red a parabolic curve rather similar to the one that I drew in 2017, which allowed me to get out before the big crash in Bitcoin and cryptocurrencies, which of course then led to me writing this book, The Crypto Trader. That was probably the main reason the publishers asked me to write it, was because I'd spotted the end of that trend and put it on Facebook at the time, sort of publicly, look, this is a real danger sign. And so they were kind of impressed by the way I got out, because if you'll remember at the time, loads of people just held on as the price went from $20,000 all the way down to around about $3,000. Now, I'm not saying this is the end of another massive trend this time, but the price did break down through that parabolic curve that I drew last night, and I was stopped out of my positions with my stop loss that I had in place. The price shot all the way down from around almost $35,000 per share, per Bitcoin rather, all the way down to 27,800. And that all happened in the space of, 12 hours, something like that. The main drop actually happened in about an hour. Mm-hmm. And, so what's that in percentage terms? I haven't actually worked it out. It's quite large, isn't it? 35 to 28. What is that? 15%? 20%?
35 to 28. So 28. So what is that? 7 divided by.
It's 20%, isn't it?
Yeah, 7 divided by 35. That's right. Yeah, it's 20%. Yes.
20% drop in the space of hours.
Yeah.
Which isn't wildly unusual for Bitcoin, believe it or not, because Bitcoin does have these crazy falls. And in fact, if this turns out to be the extent of the correction, which it might be, then it would actually be quite a shallow correction by Bitcoin standards. During the 2016 to 2017 boom, we saw a number of falls of around about 36%. I think there were a few of those, 3 or 4 of those during the course of the bull market. This is the first major correction we've seen in this bull market, and it's still only 20%. It recovered very quickly, about half of that. So it's now sort of midway between the very top and the bottom of that little crash there. So somebody has already tweeted me this morning asking, do you think that this is the start of a bigger correction? And my answer at this point in time, though by the time this podcast comes out I might have changed my mind, but at this point in time I'm thinking it's still too early to tell, frankly. When you look at the chart, if you look at it, Justin, from a bit of a distance, an hourly chart, say, I don't know about you, but I think it's impossible to tell at this moment whether that's going to continue upwards or whether it's the start of a downward thing.
Yeah, so I'd say, like I said on that tweet, I said, listen, I'm not saying it'll drop off like a cliff here. It could go sideways. And in fact, the last couple of times, because when you get stuff like this, it's such a big uptrend. And it's odd. Do you know what? I know when it's wrong. My father called me on Sunday and said, should I buy some Bitcoin? My father. I said, because it's, in the mainstream press, that's the time you know when to sell. When your father's calling you about Bitcoin, that's when you know. I said, the reason why he knows about it is in the Daily Mail, which he reads. And I thought, once it's the Daily Mail, mainstream press and all that, everyone's in pretty much. And so I said, now is not the time to buy, Dad. So I say, it may not go, drop off a cliff. It may go sideways for a while. Because like I said, it's a strong uptrend and everyone knows about it now. And so some of the dips may get bought. But I'd just wait, I'd just see what happens, wouldn't you? Just a bit of patience again here. I wouldn't, I think it's not going to zoom back up again quickly. But I think it'll go sideways or downwards. More chances of it going sideways or downwards than breaking new highs, I think, in the next couple of weeks. Well, who knows with Bitcoins? That's it, isn't it? Who knows?
Who knows?
So all you can do, if you're going to buy some, don't chuck the house on it. Put a little bit in. Because then if you get, for example, let's say you got £1,000 to put into Bitcoin. And I put it all in now. And it drops by 20%. Then you lost pretty much, 200 quid. If you halve that, and so if you put 500 quid in, then you've lost 100 quid. And if you put a quarter of that in, you lost even less. So and then you guarantee it will go up and down, and you'll get better entry points. But right now, on the top of a spike, this is not the place to do it. It'll settle down and cool down a while, and that's what it needs to do. Even the RSI needs to come back into. It's still even after that little fall off, it's still above 70. It's at 74, which is still technically overbought. So let it cool down. If you just look at a chart and go back, and think that the probability of it coming back is quite good, because every time it's been above this level and started rolling over, it's gone down a bit further. So I just wait.
Well, I agree. I mean, as I said, I've taken my profits. Well, my stop loss did that for me. So my profits are taken on this big Bitcoin run. I'm very happy with the result. It's been a good game, but there are other cryptocurrencies that I'm still interested in, and a few that I still have positions in, because this often happens actually when Bitcoin has done its thing and sort of calms down for a bit. It's like traders go, right, what other cryptocurrencies can we push the prices up of? And then they go into the other ones. And that's kind of happened. It happened with Ethereum. So I was in Ethereum, though I'm now temporarily out of that as well. But I have positions in, for example, Cardano, which is another cryptocurrency, a much smaller one, but is currently doing very well. And Maker, which is a piece of technology that is so clever and so complicated, I won't even begin to try and explain it in a podcast. It's probably the hardest of all cryptocurrencies to explain what it does, but it's a very clever piece of financial technology. I've got a position in that, and that is also looking okay as well. And there are various others that look like they're threatening to break out. In fact, while we're talking, there's one I've had my eye on for a while, Algo, and it's looks like it might be breaking out right now. Now.
How do you what's the ticker for? It's ETH first, isn't it? Ethereum. That's a similar chart to Bitcoin, pretty much, but it hasn't come back as much. That seemed to me now going forward. You can mess around with Bitcoin, but from an investment point of view, I'd prefer to go with Ethereum. I think, because isn't most applications based on Ethereum or blockchain applications?
Yes. Well, a hell of a lot of them are. Yeah, it's known as the world computer because it's a brilliant computer platform that you can base a hell of a lot of different apps on, and so it has uses outside of its own self, unlike Bitcoin, which is really just a thing in itself. So a lot of people think in the longer term Ethereum might have a better run, and its market cap at the moment, I'll just look it up, but it's far, far less than Bitcoin's. Bitcoin's market cap is approximately $600 billion at the moment. God, $600 billion. It's starting to get up there with gold now. I mean, gold, I think, is several $1 trillion market cap, but nonetheless, the rate at which Bitcoin grows, it might not be long before it catches up with gold. That would be crazy. Anyway, Ethereum's market cap at the moment is only about a sixth of that. It's about $100 and something billion. So arguably, it has a lot further to go if it's going to become worth as much as Bitcoin. I mean, $100 billion, if it was a company, that would still be a pretty racy valuation. It would still be one of the biggest companies in the world, wouldn't it, Ethereum, though? Yeah, and considering that not much useful has come out of it yet, then maybe that's quite high. The biggest company, I think, on the FTSE 100 now, AstraZeneca. That's $97 billion. Billion pounds, sorry. So it's a bit more than that. And they do a lot of useful things. And we know about AstraZeneca because they're now rolling out the biggest vaccine, rollout in history. There's going to be 3.4 billion doses. So exactly. Whereas Ethereum is effectively, a startup with some nice ideas and some interesting prospects, and yet it's got a market cap that's about the same as AstraZeneca, or more than AstraZeneca rather. I don't know if I think that's right. The future, isn't that the way things should be? No, but that's the way stock market is. It's the price of future. How do you put a price on future? Because this is exactly why Tesla, also like QuantumScape, and now solid state battery startup that hasn't even produced anything is worth, 40 billion. It's got back-in money from Bill Gates and Volkswagen, and that's also why. I mean, let's be honest. We all know electric cars are the future, and so we're going to need a lot of electric batteries. But like I said, there's a company in the UK called Illico, which I invested in. It went nuts. All it needed was like a little bit of
air, oxygen, and I gave it some oxygen, and other people started getting into it. And all of a sudden, just took off. He went nuts. He went from 130 million market cap. It over doubled in a couple of days because people said, well, "Hang on a sec, QuantumScape." And the CEO has recently said, "Oh, QuantumScape are not further advanced than us. We're about the same level." And yet, QuantumScape in the US is valued at 40 billion, which is like what? But you realise they could challenge Tesla because Tesla don't have solid-state batteries. Now, solid-state batteries, they charge faster, they hold charge for longer. They're not flammable, which liquid lithium-ion our batteries are. So they could be the future. Now, if that's the case, then Tesla's probably going to have to adopt them, or buy them. So you can see the potential there. Or if he doesn't buy them, probably won't buy QuantumScape. If there's another company out there with similar tech that's a lot cheaper, then they could buy those like Ilika. So the hype catches on, isn't it? It's contagious.
Just a bit of a bit of a comment on that. It's something I feel very strongly about. We really, really need to stop giant tech firms from buying up little tech firms that are potentially competitors or that have useful technology that might one day supersede the big company, because it's destroying our competitive market. If we want a free market that operates efficiently, you have to stop the giants from stealing the competition and shutting it down, or either shutting it down or running it slowly or just incorporating it into their own technology. But whichever way they do it, I mean, we've seen it with all the internet tech giants over recent years, Facebook buying up Instagram, which was shaping up to be its major competitor, that kind to
and
like, how do we want to have
WhatsApp. Look at Facebook.
Yeah, and WhatsApp.
Very clever.
Yeah, exactly.
Facebook is crowd, his audience is maturing, and they're not catching the younger audience. So basically, they've bought younger viewers or a younger audience by getting WhatsApp and Instagram. It's very clever. But then again, when you think of it, if you're looking at if you want to improve technology, and a big company can add resources and cash and money, then surely. What are you after? Competitiveness, or are you after better tech?
No, because for the long term, you need the competitiveness, because it's the only way that things... it's not the only way, but it's the best way that things improve for consumers in the longer term, because then you have price competition. You don't have big companies that are able to gouge everybody, which is the situation we have currently, where they have even major governments over a barrel. If you have a properly competitive market where small companies are allowed to grow and not succumb to the temptation to be bought up by much larger companies, then you get a more healthy venture capital market starting to grow for those smaller companies, which is no longer revolving around trying to set up deals for larger companies to buy them. And you get the smaller companies eventually usurping the larger companies, and they are more nimble. They have cleverer technology that grows more quickly because they're smaller and more nimble. And eventually they become the lumbering giants themselves. But then they would get taken over, and not taken over, they get usurped by new smaller companies. That's the way. That's what I learned in economics at school and university. That's the way it's supposed to work, not the way that it currently works, which is a very kind of screwed up, badly regulated capitalism that we currently have. But anyway,
surely it's been tight. I mean, it's taken a while, because we are in a new age. Let's be honest. I mean, there's like I said, all the way these companies get away with it is that they say they're not producers of content. They say they don't fit the standard, regulation of broadcasters and all that stuff. So they get away with it. But now the tide is starting to turn, isn't it? And I think it will start to turn, because we're still, legislature is very slow. It's like a dinosaur. It's like it moves at glacial speed, doesn't it? So that's a catch up. But I think once it's in place, and we've seen this, you get, because there's been scandals. It's like the amount of stuff. I don't know what's going on, so I'll sign up for something, and all of a sudden I'll get an email or an advert pop up exactly the same in my emails or something like that, and or I'll get suggested friends on Facebook that I've only had email contact with. I think, well, hang on a second, how do Facebook even know about the? Because I got Gmail. How are they connected to Facebook? Now, that shouldn't be happening. I haven't given permission, because there's no time I've given Facebook. I don't think so. No time have I given Facebook permission to have my email addresses or my email contacts, and yet they've gone through them with it. So there's always. Well,
you have probably given them permission. And I know a new Instagram.
No, I haven't. That was before they were clamped down on because that Cambridge Analytics thing. Well, that's the way they were going through stuff. I think probably beforehand they're even more sort of sort of dodgy with your data than they are now.
Possibly so. Though, well, what I was going to say was I saw. I should have made sure that this was true before I say it. But anyway, I saw a video the other day that talked about Instagram's new terms of service that apparently everybody on Instagram has just signed up to without reading, no doubt. And the video was describing how it includes permission for all of those things that you've just mentioned, permission to access, pretty much everything you do online and on your computer. And I don't know, I need to check if that's definitely true, but let's face it, everybody would just sign it without reading. I mean, who's going to read those terms of service?
I know, that's
not going to happen.
Well, exactly. They're all there, but generally, if you've got to be quite a special person, quite anal to read all that stuff, and there are people that do it, but generally those people don't go on. I gotta laugh, the people who whinge about, their data being stolen and all this on social media. And I said, well, get off social media then. Why are you doing it? And anyone who's got this big brother conspiracy theories and they're voicing their concerns on social media. So are you kidding? Like they're worried about this. I gotta laugh, the vaccine. Bill Gates is putting a chip into you to find out where you're going. You don't need to. You're talking about it on social media. These companies know where you are anyway. They've got all your information. Everything's online about you already. They don't need any more information. It's absolutely
I guess
nonsense.
the problem is that social media, when we're all in lockdown, social media is almost an essential mode of communication now. It's like the public street. It's become the new public street. So that would be like saying if somebody was complaining that cars come racing down their road and threaten to kill them every day, and you said, well, just don't leave your house then. Nobody's forcing you to leave your house and walk into the street. It's under normal circumstances, social media would be optional, but it's not really optional.
No, it is
at the
optional.
moment.
Of course it is.
It's the only thing you can do to stay sane and keep in
contact
contact with the world.
It's not at all. You don't have to. It is optional, completely optional. In fact, I think people should cut down social, because you can get your news stuff from news channels. You don't have to go to social media for it. And of course,
but I'm talking about communication.
No. But when you walk down the street and go across and the cars are not, you know the danger's there. You don't know what they're doing with the data. Essentially, they say they do, and they put these long. When you don't know what they're doing with the data. I often question that, and we didn't know for a long time. People were saying, wait, like I said, like Facebook, for example, and there's that classic quote, when you're not charged for a product, you are the product. Your data is the product. That's what Facebook was doing, and we all sort of knew it. But when people started being disgusted by this, and they were, oh, hang on a sec, I didn't realise this. Really? I mean, people are putting on Facebook everything they do, and from eating this to meeting people. They know your friends, they know what you eat, you're joining hobbies, they know what you like. Of course they know loads about you. They know more about you, know about yourself. They've got algorithms on you that you don't have. So, we also know that. Don't we?
You know what the answer to all this is? Is blockchain. Yes. There have actually been attempts in the past, quite serious attempts, to create a social media app using blockchain, because the idea is, as with all good blockchain ideas, it's decentralized. There was one, or there still is one, called Steem, STEEM, which was very popular a few years ago, but seems to have sort of dropped out of the public gaze somewhat, which I think is a shame, because it was a good idea. It was kind of like Reddit, but
I know
a decentralized version. So when it's decentralized, there's nobody who can steal your data, because it's it's sort of owned by everybody and nobody. And what's more, people are working on social media apps based on blockchain, where you can get a perfect encapsulation of your own data and get to keep it for yourself. And then if you choose, you can sell your own data to the highest bidder, that kind of thing. All of that hopefully will happen in the future. I'm really a little bit surprised and disappointed that it hasn't already happened in that way, that no such app has taken off, and that the media tech giants are still in charge of everything. But there's no reason that has to be the case forever. These things can be decentralized and can sort of run themselves.
Mm-hmm. Yeah, cool. Okay.
Although they won't be able to censor their own content, though. We'll still need some kind of central authority to censor things if governments insist on it, I suppose.
Yeah. Do you? So, what do you say? Do you say you're in or out? You're in Bitcoin now. You're out, yeah?
No, I'm out now. But I'm in some other cryptocurrencies. In fact, I just bought one. The one I just said was breaking out. Algo. I bought it while we were talking. I might sell it again if it doesn't take off properly, but so far it looks all right. I may well get back into Bitcoin. I'm watching it very, very carefully. Bitcoin and or Ethereum, both of which I'm watching very carefully because, as we said earlier in this discussion, it's hard to know at the moment whether they're going to go up or down. I mean, that seems like a kind of trite thing to say, especially for a trader. But, it's the honest truth. It's going sideways. It's not showing signs at this point in time of whether it's going to break out to the upside or to the downside. And we just have to give it some wiggle room and wait until it sort of forms a little pattern which tells us which way it will probably break out. That's how it usually works.
Cool. Yeah.
You get me?
Yeah. Anything else on the news front? Anything regulatory coming up that's any good? It's worth looking at.
Nothing that we didn't cover last week. I would just make a brief comment on the general markets because, as you know, I trade everything, not just cryptocurrencies. And yesterday was a pretty harsh day for somebody who's got a lot of American shares like I have. There was a big and very sudden decline in the market, which actually coincided with the decline in cryptocurrency markets. Let's have a look at the timing. It wasn't exactly the same, actually, but it is a bit of a coincidence, isn't it, that they both plunged very suddenly on the same day. Anyway, but yeah, the hours themselves don't quite match up, so maybe it's just a coincidence. Anyway, it was unpleasant, but I'm still in nearly all of my US stock positions. I haven't been shaken out of those yet. None of my stop losses were hit, apart from I think one or two, but I've still got literally dozens of American shares, far too many to keep a close eye on.
Why did you do that then?
We've discussed this before. It's because I was like a kid in a sweetie shop. I just kept seeing all these nice breakouts, one after the other, and I kept buying.
I mean, you're better off by not diluting so much, and you and just concentrating on a few rather than having lots.
Yeah, but I kept seeing nice ones, so I'd go. Even though I had open positions, I'd see another one, and I'd go, well, I've got a bit of spare money. Oh, I'll buy that one as well. Oh, I'll buy that one too.
I guess it's partly because I was being
quite timid earlier on.
Yeah.
In the first couple of dozen shares that I bought, I was being quite timid in terms of the amounts that I was putting into them because I wasn't as confident about the direction of the market. And then later on, I just kept seeing more breakouts and buying more of those, and keeping the amounts relatively small still. Yeah. Because I was buying later in the trend. Basically, I found reasons both early in the trend and late in the trend. I managed to find reasons to not put too much money into each share. So now I've just ended up with dozens of relatively small positions, though some of them have grown into much larger positions, which is nice. I don't know. Anyway, I need to cut back.
Yeah, deadhead some of them. And just chuck them into conviction plays. I think anyway, Larry. And so, what are you going to do with Bitcoin? You're not automating anything there, just manually sitting and watching and waiting.
Yeah, there's no, that's the thing. Once a decent pattern forms, then I'd be able to put in a buy order, a stop buy order, so that if it went through a certain price level, then I would be buying in automatically. But at this point in time, there isn't a decent chart pattern upon which I can draw lines and choose an in point to buy. There's no obvious point where a breakout would occur. So yeah, I'm just going to watch it. By the end of today, we might have a decent pattern. I can see what looked like the beginnings of a triangle shape forming. So hopefully that will continue, and if it does, then we'll be able to draw our nice resistance lines, won't we?
Nice. By the way, looking back at last year, how did you generally do over the year? Was it any good? Were you up?
Yeah, I was up. I had a pretty good year overall. The first 6 months were not good because obviously first we had that crash, and I did, if you remember, sell all my shares at the beginning of the crash and felt quite smug about it, but I didn't feel quite so smug when everything started recovering a lot more quickly than I expected. So I didn't buy in, I sold at the top, but I didn't start buying in at the bottom. I didn't start buying in until a fair bit later. So, I was feeling a little bit silly while other people were starting to make money in sort of April, May, June, that kind of time. And then belatedly I got on board and started making money myself as that trend, particularly in the American markets, just went up and up and up and up. So that kind of made up for the mistake that I'd made earlier in not buying early enough. And as for cryptocurrencies, it's just been amazing since October time. Since because I bought in around about $10,000 was when I bought Bitcoin properly, as it were, and it's gone all the way up to 35, and then now I've sold at about 33.
Do you ever?
It started to fall.
Publish your sort of performance, not actual figures, but in percentage terms.
No, because I don't run a subscription service. Even if I ran a subscription service with advice, I wouldn't necessarily publish them. But, these people who run services where they actually tell you now is a good time to buy this. Now is a good time. They give you alerts and that kind of thing. They send you alerts. Those people, I think, are obliged to really publish their own private financial figures.
I do that though, every year, pretty much every month, just because I talk about stocks anyway. I don't tell people to buy. I only talk about stocks that I buy, and I explain why I bought them, and then I show at the end of a month, a year, how I've been doing. Because I think because I just think there are lots of people out there on especially on Twitter, ramping stocks. And generally, they haven't got the real name or real face on the. And I think, why do people trust anyone who is that that opaque, that you can't get less transparent than that. If you don't, would you actually buy anything off someone? Imagine you even get an extension done in your house, but you can't see the builder or know his name before he comes on and does it. Would you take advice of that guy? I always think the more transparent people are, the better. I think. And if you're paying them. That's the difference. If you're paying them, then I see people on
they
Twitter
should give you their figures, like a builder, as you say. If you're paying them, you want to know their track record.
Yeah, but I see people on Twitter.
Nobody's paying me.
No, but what I'm saying, not like your real name's out there and your face is out there. People are going to see who you are. I'm talking about people who have like some kind of avatar, normally of a superhero, or some cool avatar. We know the person behind it doesn't look cool at all. Doesn't use their real name either. So. And yet they are, got quite a few thousand followers on Twitter, and they're ramping stocks to high heaven, and people are following them on these trades, and then they get surprised, and if they lose money with it, in no other walk of life would you trust someone who wouldn't tell you their name or show you the picture of their face with your money. I mean, why are you following people in these trades or these investments?
Absolutely remarkable. They're called things like Crypto King and Crypto Guru and that.
Well, not even on crypto, man. I'm talking about on AIM. Stocks is lots of people there. People don't show you their name, don't show you who they are, but yet they've got quite a few followers, and people follow them into trades and stuff. They don't even show you their returns at the end of the year. I wouldn't mind that. If they showed returns saying, okay, these are stocks I picked at this level, I sold this level. They don't do any of that. So literally, it's basically, rockets and all that stuff, and people buy into that. I don't think
exactly.
People, it's your money. Don't follow people you don't trust.
It's the most important thing in your life, apart from your family. It's your money. Don't trust it to Mr. Stock Sniper.
And you're following
like some 12-year-old kid living in Thailand who's just set up a Facebook account, called himself Stock Sniper, and then decides that he's going to tell everybody what to buy, what to sell. And these people say, their trick is that they say it with such certainty, which you'll notice is the precise opposite of what I do. And this is probably why some of them have more followers than me.
Exactly, that's it.
It's because they have certainty. They're like, yes, it's definitely
going to the moon.
Up.
This is going to the moon.
Know if it's going up or not. Nobody has a bloody clue. Nobody has a clue. And with the reason we know for sure that nobody has a clue is all you have to do is go back, do a quick Google search for end of year predictions from analysts, the banking analysts, the ones who actually do this for a job, even try and predict what's going to happen next year. Like, you might as well be tossing a coin or throwing darts at a dartboard with a blindfold on or whatever. It's literally they're wrong as often as they are right. And these are the professionals, not even the 10-year-old kids in Thailand pretending to be stock sniper. The point is, it's incredibly difficult to predict what the market's going to do. And anybody who says it with any kind of degree of certainty is just a liar as far as I'm concerned. It's the same with Bitcoin. All the people who have ramped Bitcoin over the years, they were right, but they could just as easily have been wrong. Did I tell you this theory that I have last week about how if COVID hadn't come along, we might not have even seen this Bitcoin boom? Because the entire narrative of the Bitcoin boom was driven by the narrative of money printing in the United States. And that's sort of what encouraged everybody, particularly the big institutions, to start buying into Bitcoin as a hedge against the money printing in the States and the fall of the dollar.
Mm-hmm. No, exactly. So
have you just been to the toilet while I was saying all that?
Yeah. Right, did you hear the flush? No. Yes, what I'm saying is don't trust someone, on Twitter called Super Mario or whatever he's called, because it's not Super Mario. It's probably someone called Dave who's just looking to ramp you into a stock to sell his stock to you. Anyway, marvellous stuff. Glenn, luckily, we're running it over here, but I'm a bit late for the next guy. So
okay,
gotta go, and we'll speak you next weeky.
Good. Looking forward to it.
Didn't sound like you were there at the end. You tailed off. Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. You can check out this list, by the way, top 10 version of this list at voxmarkets.co.uk. And they are at 5, Helium 1, down 6.4% to 7.7. At the 4, non-mover, Mode Global Holdings, 49 pence. At 3, Pineapple Power Corporation. Quite like that. It's powered by pineapple. I think they're an investment company looking for clean energy, investments. They're down 10% pretty much to 5.2. At 2, it's Tirupati Graphite, and that's up 19.26% to 80.5. And at 1, up again, Argo Blockchain Mining, 57 pence to 21%. I started talking about those when it was about 7-8 pence, I think. Check that list out at voxmarkets.co.uk. Most read RNSs are today. Let's have a look at they are at 5, Motive Bio, business update. At 4, Hemogenics Pharmaceuticals, CAR-T Master Translational Agreement with Penn. At 3, Argo Blockchain December Operational Update. At 2, Remote Monitor Systems Farm-to-Farm Update. And at 1, it's Novacyte, Executive Management and Proposed Board Changes. Check that out, all those at voxmarkets.co.uk.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.